Good day, class. Our lesson for today is Chapter 2, Lesson 1, the Tax Collecting Agencies of the Philippine Government. In the Philippines, several tax agencies are responsible for administering and enforcing the country's tax laws. These agencies have specific functions and areas of jurisdiction to ensure the proper collection and implementation of various taxes. The key agencies in the Philippines are the Department of Finance. It oversees the various tax agencies in the Philippines. It formulates tax policies, provides guidance to tax agencies, and proposes tax-related legislation to the Philippine Congress. The Bureau of Internal Revenue, or the BIR, is the primary tax authority in the Philippines. It operates under the Department of Finance and is responsible for assessing and collecting national internal revenue taxes, including income taxes, value-added tax or VAT, excise taxes, donors taxes, estate taxes, and documentary stamp taxes. The BIR is also in charge of taxpayers' registration, tax audit, tax enforcement, and providing taxpayer assistance and education. The Bureau of Customs, or BOC. The Bureau of Customs is the agency responsible for overseeing the collection of custom duties, tariffs, and other import-related taxes. It operates under the Department of Finance and is responsible for facilitating international trade while ensuring that imported goods comply with customs laws and regulations. Bureau of Local Government Finance, BLGF. The Bureau of Local Government Finance is under the Department of Finance and is responsible for overseeing the fiscal administration and financial management of local government units, or LGUs. It assists LGUs in revenue generation and provides technical support in tax administration and financial planning. Local government units, or LGUs. LGUs also play a role in tax administration at the local level. They are authorized to impose various local taxes, fees, and charges, including real property taxes, business taxes, and fees for licenses and permits. These tax agencies work together to ensure the efficient and effective administration of taxes in the Philippines. They play a crucial role in revenue generation, fiscal management, and supporting government initiatives and programs for the country's development and progress. Powers and duties of the Bureau of Internal Revenue. The, the Bureau of Internal Revenue, or BIR, is the primary tax authority in the Philippines, responsible for administering and enforcing the country's tax laws. It operates under the Department of Finance and plays a crucial role in revenue generation, tax collection, and ensuring tax compliance. The powers and duties of the BIR are outlined in the National Internal Revenue Code, or NIRC, and other relevant laws. These are the key powers and duties of the BIR. Tax collection. The primary duty of BIR is to collect taxes imposed under the National Internal Revenue Code and other tax laws. This includes income taxes, value-added tax, excise tax, documentary stamp tax, donors taxes, and estate taxes, among others. The BIR is responsible for ensuring that taxpayers pay the correct amount of taxes and meet their obligation in a timely manner. Tax assessment and auditing. The BIR has the authority to conduct tax assessments and audits of individuals, businesses, and other entities to verify the accuracy and completeness of their tax returns. Through tax audits, the BIR aims to detect tax evasion, tax fraud, and other irregularities to ensure fair and proper compliance. Taxpayer registration. The BIR is responsible for registering taxpayers and assigning them taxpayers' identification numbers. All individuals and entities engaged in business or earning income are required to register with the BIR and obtain a TIN or taxpayer identification numbers. Issuance of tax clearance. The BIR issues tax clearances to individuals and entities as proof of their compliance. Tax clearances are often required for various transactions such as securing government permits, licenses, and participating in public bidding. Tax rulings and interpretations. The BIR issues tax rulings and interpretations of tax laws to provide guidance to taxpayers on how specific provision of the tax code apply to their particular situations. These rulings help clarify ambiguous tax matters and assist taxpayers in determining their tax obligations. Taxpayer assistance and education. The BIR is tasked with providing assistance and education to taxpayers to promote voluntary compliance. It conducts taxpayer seminars, publishes tax guides, and maintains help desks to address taxpayer inquiries and concerns. Tax enforcement and legal action. In cases of non-compliance or tax evasion, the BIR has the power to enforce tax laws through various means, such as issuing tax assessments, imposing penalties, and filing criminal charges against tax evaders. Tax policy recommendations. The BIR collaborates with the Department of Finance and other government agencies in formulating tax policies and proposing amendments to the tax code to address emerging issues and economic developments. International cooperation. The BIR engages in international cooperation to combat tax evasion and promote the exchange of information with other countries, particularly through tax treaties and agreements. Revenue collection targets. The BIR is mandated to achieve revenue collection target set by the government. It plays a crucial role in funding government programs and services, infrastructure development, and social welfare initiatives. The Bureau of Internal Revenue plays a critical role in the Philippine economy by ensuring a fair and efficient tax system and fostering taxpayer compliance. Its powers and duties are essential for maintaining fiscal stability and supporting the country's development and progress. Powers and duties of the Bureau of Customs. Powers and duties of the Bureau of Customs. The Bureau of Customs, or BOC in the Philippines, is the government agency responsible for enforcing custom laws and regulations, as well as facilitating international trade while safeguarding the country's borders. The BOC's main function is to assess and collect customs duties, tariffs, and other import-related taxes. Its powers and duties include the following: customs duties and tariffs. The BOC is responsible for levying and collecting customs duties and tariffs on imported goods. These duties are imposed to protect domestic industries, regulate the flow of imports, and generate revenue for the government. Customs duties are typically ad valorem taxes calculated as a percentage of the value of the imported goods. Value-added tax on imports. In addition to customs duties, the BOC also collects the value-added tax on certain imported goods. VAT is a consumption tax applied at a standard rate of 12% on the total cost of the imported goods, including customs duties, excise taxes, and other charges. Excise taxes are excise taxes on imported goods. The BOC is responsible for collecting excise taxes on specific imported goods such as alcohol, tobacco, petroleum products, and automobiles. Excise taxes are levied on top of other import duties and taxes and are intended to regulate the consumption of certain goods. Anti-dumping and countervailing duties. The BOC has the authority to impose anti-dumping and countervailing duties on imported goods that are being sold at unfairly low prices or benefit from government subsidies in their country of origin. These duties are imposed to protect domestic industries from unfair trade practices. Trade facilitation and tariff classification. The BOC provides assistance and guidance to importers and exporters regarding tariff classification, valuation of goods, and other customs procedures. It ensures that goods are correctly classified and valued to determine the appropriate customs duties and taxes. Customs valuation and assessment. The BOC is responsible for assessing the value of imported goods for customs purposes. It uses internationally accepted valuation methods to determine the customs value of goods and calculate the applicable customs duties and taxes. Border control and enforcement. The BOC plays a crucial role in safeguarding the country's borders and preventing the entry of illegal goods and contraband. It conducts inspections, examinations, and seizures of goods that violate customs laws and regulations. Tariff and trade policy recommendations. The BOC collaborates with the Department of Finance and other government agencies in formulating tariff and trade policies. It provides recommendation on tariff rates and trade facilitation measures to promote economic development and competitiveness. Revenue collection targets. The BOC is tasked with achieving revenue collection targets set by the government. It plays a significant role in funding government programs and services, infrastructure development, and social welfare initiatives. The Bureau of Customs plays a critical role in regulating international trade, ensuring revenue collection, and safeguarding the country's economic interest. Its taxing powers and duties are vital for maintaining fiscal stability and supporting the country's development progress. Taxing power of the local government units. The local government units in the Philippines are granted taxing powers under the principle of local autonomy as enshrined in the 1987 Philippine Constitution and the Local Government Code of 1991 or Republic Act 7160. This delegation of taxing powers allows LGUs to generate their own revenues to finance local programs, projects, and services. The taxing power of LGU is subject to certain limitations and guidelines, but it grants them the authority to impose various taxes, fees, and charges within their territorial jurisdiction. Here are some of the taxing powers of the local government units. Real property tax. LGUs have the power to impose and collect real property tax on all types of real properties located within their respective areas. Real property tax is levied annually on the assessed value of land, buildings, and other improvements. Business taxes and fees. LGUs can levy business taxes on entities engaged in business activities within their territorial jurisdiction. The tax rates may vary depending on the nature of the business and its gross sales receipts. LGUs can also impose regulatory fees for business permits and licenses. Franchise tax. LGUs have the authority to impose franchise taxes on businesses operating under the legislative franchise within their territory. Franchise taxes are typically based on gross receipts or earnings of the franchise holder. Community tax or cedula. LGUs can collect community tax or cedula from individuals residing in their area. The community tax is a fixed amount imposed on residents and is usually renewed annually. Local taxes on sand, gravel, and other quarry resources. LGUs with natural resources like sand and gravel deposits can impose taxes on the extraction and utilization of these resources within their territorial boundaries. Professional tax. LGUs can impose professional taxes on individuals engaged in profession, occupation, and businesses subject to professional regulation. Local transfer taxes. LGUs can collect transfer taxes on the sale, donation, and other modes of transferring real property ownership within their jurisdiction. Amusement tax. LGUs have the power to levy amusement taxes on gross receipts from admission fees to entertainment, amusement, and recreational events. Environmental fees and charges. LGUs can impose fees and charges for the use of environmental resources and facilities, such as solid waste management fees and pollution control charges. Local economic enterprise taxes. Local government units can generate revenues through local economic enterprise taxes imposed on their own income-generating venture and business activities. It is important to note that the local government code provides guidelines on the imposition and administration of these taxes, including limitations on tax rates and the procedures for tax collection. LGU are also encouraged to adopt sound fiscal management practices and ensure transparency and accountability in the utilization of local funds. The exercise of taxing powers by the LGUs complements the national taxation system and enhances their capacity to promote local development and provide essential services to their constituents.